Fine. Now, what is there actually when you are doing the things? This is, see, people will ignore this. That why we have to study, why examination question papers, if you go back last year, this year and last 4 exam papers, they have focused this on this. Is it right? What is the conceptual framework and what is the regulatory framework? Is it conceptual and regulatory framework? How it will work? Is it right? When you are doing the things, there are some rules and regulations. Is it right? Today is 6th of October. Is it right? Today is, you have some rules and regulations, as simple as that. We have to follow the rules and regulations. Whenever we are talking in terms of what? Whenever we are talking in terms of the annual reports. Is that annual financial report? What the annual report says that every other annual report, if you take Oman into consideration, it says that it is prepared as per the commercial company law of Oman. Okay, commercial company law of Oman. Is it right? 1974. Then they will say it is going to be by international accounting standards and international financial reporting system. This is for accounting purpose. Is it right? This is for reporting purpose. Is that's why we are talking in terms. Is that there are two different things. One we are using it for accounting. One we are using for reporting. Is that both are important. There is no doubt. They have made some changes. Is that now what we are doing? We are talking in terms of IFRS. Is that here we are talking in terms of IFRS. Here we are talking in terms of international accounting. Is that as simple as that? Basically a theoretical one. Initially I am telling you, okay, but theory is, you can understand. I will make it how it is applicable for our calculations. Is it right? We are talking in terms of when you do the things, anywhere, any doubt, you can stop me. Okay, why it is, see, regulatory framework, why it is important. Is that, see, you are talking about what you make the classification. Is it right? You make the classification for companies. Is it right? You make the classification of companies. What happened there? You are talking in terms of sole trader. Is it right? You are talking in terms of partnership. Is it right? You are talking in terms of LLC, limited liability company. You are talking in terms of what? SAOG. Is it right? You are talking in terms of SAOC. This is a joint stock company. Is it right? This is a joint stock company. See, when you are doing the things, definitely we want to make sure that, is that everyone will follow the same structure. Is it right? When everyone will follow the same structure, we use in the accounting, we use a word called as harmonization. Harmonization. Is it right? It means harmonize means harmony, equality. See, you prepare as per your requirement. Nobody will question you. But the sales means sales, revenue means revenue. Is it right? Some people will say sales, some people will say revenue. Is it right? Some people will say income. Is it right? Why is there any difference is there in this? Tell me first.
No difference, it's same.
Allah Kareem. Yes, Rizwan. Yes or no? Don't waste time.
Revenue and income same.
See, I will say I am not saying. Is that when you take the income, it will be with respect to which type of companies? Services. When you are talking about the revenue, it will be for which type of companies? Trading. When you are talking about the sales, it is for which type of companies? Manufacturing. Understand what? It's same. I'm not saying that it is different. But what happens? You are using it. If you take banks, is it right? If you take insurance company, banks, you take the banks. Bank will say interest income, interest expenses. Banks will never say sales. Bank will never say it is a revenue. Is it right? Bank will never say it's a revenue. Bank will say interest income, interest expenses. If you go to the any sales company, is that manufacturing? You talk about Oman Cements. Oman Cement says sales. Is that Oman Cement will say sales? That is a basic difference. Is that your car manufacturer? Toyota will say sales because they are selling the product. For them, there is not an income. For them, it is a manufacturing. It is sales. You are talking about the trading. People who are doing trading. Is it right? For them, it is a revenue. Is that you have so many trading companies in Oman? Is it right? They will have the revenue. Likewise, we will do the things. Is that we will talk about what is the regulatory framework, why it is needed. Everybody has to understand. Is that everybody has to a common understanding. You are working in one company this year, next year you will move to another company. Only the company activities will change, but the financial statements will never be changed. Okay, financial statement, structure, everything will remain same. That is why we call it as a regulatory framework. Explain why the accounting standards, is it right, on their own are not complete regulatory framework. Say accounting standards are very flexible, is it right? They will give, when you are talking about the accounting standards, is it right? When you are talking about the accounting standards, take accounting standard 1. Is it right? If what it says, accounting standards 1 says, it is the preparation and presentation. Accounting standards 2 says it is with respect to inventory. Likewise, every standard is there. Again, what we say when you are talking about the inventory, you have different methods. Is it right? You will have different methods. That is the reason whenever we talk about the things, is it right? Whenever we talk about the things, the accounting is based on what? Accounting is only based on assumptions. You are a finance manager, your assumptions will be different. My assumptions will be different. Rules will be same. Is that rules will be same, but my assumption will be different. Your thinking, your decision making, your judgment will be different. My judgment will be different. Is it? That is the reason nobody will say that you have to follow it as it is. Law is different. The policies are different, standards are different in terms of analysis. Is that we will cover this. There are two things are there. One, we are talking in terms of principle based. One, we are talking about rule based. I am putting this an asterisk mark. They will ask you question on this. Is that what is the concept? We will discuss this. What is the principle based and what is the rule based system? Is it debits and credits? Is it right? These are the principles of accounting. Is it right? We will do this in a later stage. Describe what are the international how they will set. Is it right? How they will set the standards. It is not by 1%. Means almost, if you take into consideration, it is almost 190 plus countries are there. Is that 170 or 190 plus countries are there who follow the network. You are working in Oman, you will follow the same rules. You will go to France, you go to Germany, you follow the same rules. The rules will never change. Is it right? That is the reason everybody will have some coordination. Little bit theoretical one we are going to cover. Okay? Relationship between what is the national standards. I told you, when you are talking about the national standards, what happened? Commercial Company Law of Oman 1974, that is the standard. Is that whoever wants to do business, they want to follow the rules and regulations as per commercial. First you have to follow national rules. Then you have to go for international rules. Understand what? Any company, anywhere in the world, this is the rule. Got it? Any country. First priority, first importance means, see now what is the reason behind this? You are starting one company. When you start the company, you will start as per the national law. Is it right? Then you will go for a internet. You cannot start one company in other country and you can say that I will operate from here. Nothing. The moment you want to do the business here, you have to start the company first here. Is that right? That is what we are talking about, the national laws. I told you, Commercial Company Law of Oman 1974. What is the conceptual framework? You have, when you say what is the framework, is that it will be like this. I will make it a point. Is that you have the first level, second level and third level. Is that you have the first level, second level, and third level. They will be, see what is the conceptual framework. They will be say asset. What is the mean by asset? What is the liability? What is the revenue? What is the profits? What is the loss? You have to be very clear that these things should be very specific. Is it right? Discuss what is the alternative systems might be. Is that what if it is not working? What is the conceptual framework? Conceptual framework is nothing but we are talking in terms of what? We are talking in terms of elements. I'm right. I will write here only. Is it right? We are talking in terms of what are the 5 elements. Is it right? You have the assets. You have the liabilities. Is it right? You have the equity. Is it right? You have the profit and loss. There is a specific definition is given. Okay. Now define and discuss the fundamental and enhancing qualitative characteristics. What is it? What is the quality? See, we are talking only about, see, there are 2 things. Is it right? We are talking in terms of quantitative. Is it right? We are talking in terms of qualitative. Is it right? We are talking in terms of qualitative. When we say quantitative money measurement concept, wherever you take Oman into any company into consideration, what they will do, they will always make it a point that they will reflect it in Omani riyals. Is it right? Whereas qualitative is what? When we are presenting the financial statement, both applies for qualitative and quantitative. Is it right? When you are talking about qualitative, it should be reliable. It should be relevant. Is it right? It should be, we call it as, it should be timely. Is it right? It should be on a timely basis. Is it right? It should be consistent. Is it right? We should follow this, that it should be consistent. There should be some comparison. Is that? There should be one comparison. That is the reason all the time they will give financial statements for 2 years. They will never ever give financial statement for 1 year as such. Is right? We will cover this. What we are doing? We are going to cover what are the qualitative characteristics. Is that? See, here we will have, if you ask me, 6 marks they will give on this lecture. Okay? 4 to 6 marks. Is it right? Explain that define explain the recognition of financial statements. Is that? We will say when you are talking about the recognition money measurement concept. Is it right? Business entity concept. Is that prudence concept? There are some basic rules are there on which we will say that it is going to be debits and credits. How many accounts are there in financial accounting? I told you previously. How many accounts are there? Yes or no? Don't waste time. If you don't know, say we forget, nothing will happen. How many accounts are there? Lecture 2 I told you. Don't waste time, please.
3 accounts.
Yes, what are 3? Good. What are 3? Personal account. Yes, personal account, real account,
real
and
accounts,
yeah.
nominal account.
Good, exactly. Is that? It makes sense, is it right? I will ask you questions like this all the time. Keep it in mind. Is that you will based on that how we are going to explain the financial statement. Financial statements. When we do the financial statements, is it right? Financial statements is going to have what we are talking in terms of what we are talking in terms of performance. Is it right? We are talking in terms of position. Is it right? We are talking in terms of prospects. Is it right? We are talking in terms of prospects. Performance for the income statement. Okay? Performance for the income statement. Position for what? Statement of financial position. Balance sheet. Prospect is what? Prospect is what? Cash flow statements. Is that? That is the reason we call it as 3 P's. Is that? Performance, position, and prospects. Is that? We will do that. We will cover this, how it is going to be worked out. Apply the recognition criteria. Very important. You have the assets, you have the liabilities, equity, income, and your expenses. These are going to be called as 5 elements. Is it? These are going to be very specific. Is it? These are the 5 elements. Is it? Assets, liability, equity, revenue and income and expenses. Is it? We will do this. Discuss what is meant by the financial position approach of the to recognition. What is the ultimately we'll say that assets should be equal to your liabilities. Is that equity and liabilities? Indicate whether when income and expense recognition should occur in the financial position. If you say into consideration what we have done something in terms of accrual concept. Is that we have to take into consideration something called as realization concept. Is that unless until the money is not in your hands, you should not show. Is that how it will happen? Is that how it will happen? See the thing. You will have the credit. You have the credit sales. Credit sales will give you what? Credit sales will give receivables. In these receivables, you will know there is no guarantee that 100% they will pay you. There will be some what? There will be some provision for losses. Then what will happen? You are talking in terms of cash. Is it? When we do the things, provision. Is it right? Provision is nothing but we are estimating. Is it? When you say the estimating, you are talking in terms of what? There is a prudent concept. See, when you are doing the things, you should not I should not be aggressive. What does mean aggressive? Aggressive. See, unless until money is not in your hands, you cannot say money is there with you. Is it right? Very important. As an accountant, it is very basic principle. Is it right? You are giving 100 reals to your friend. Tomorrow you should not, unless until you don't get 100 reals back in cash, you should not show 100 reals in your books. Understand, point? That is very crucial as such. Is it right? We will cover those concepts as such. Is it right? Now we have already I gave you a complete picture about the framework. Framework is nothing but how we are talking in terms of elements, how we are talking in terms of measurements and quantitative characteristics and qualitative characteristics. Is it right? Is it okay with you? Fine. Is it what it says? Yes. Is it what it says? Framework. Is that when we are saying it's a conceptual framework? You will have, see, first we have the regulators. Is it right? You have the regulators. Regulators are what? Regulators are the ministries. Regulators are MSM, Muscat Security Exchange. Is it right? Capital Market Authority. These are the regulators. Is that they will regulate, they will put the rules. What have to do, what we should not do. Is it right? Those are the regulators. There is a system will be there. Is it right? See what happens every time, the moment, every year. Is it right? Every year. Is it right? Every year end. Is it right? Every year end, you have to submit audited financial statements. Is it? You have to submit that audited financial statements for the stakeholders. Is it right? That is the system where we are working. Is it right? You have the process. Is it not only what you are doing when you are talking about the regulatory system? Your regulatory system will be what? It will be two-phase. Is it right? Regulatory system will be national. First national, keep it in mind. Any country. Is it right? Then the regulatory system will be international. Is it? The one. See, once I am doing this, again I am not going, again it is not going to be repeated anywhere till the last lecture. Okay? Other concepts we will repeat again and again. This concept will not be repeated. But this concept we are going to use in applications everywhere. Every lecture we have applications. Is that you have regulatory bodies. Some people will set the standards. Is it right? Some people will set the standards. We follow those standards as such. That's what we are talking about. IAS and IFRS. Is that? Now, this is one segment. Is that regulator? Means the people who will define the rules. Is that? On the other side, you have the conceptual framework. What is the conceptual framework? We are talking about elements. The framework is nothing but elements of financial statement. What are the elements of financial statements? You have the assets, you have the liabilities, you have the equity, you have the revenue, income, is it right? You have the expenses. These are 5. Okay. Recognition of elements of financial systems as well. Again, how you are going to make it a point. It all depends on debit and credit. What is the qualitative characteristics? Is it qualitative? See, when you are preparing a financial statement, it should be more presentable. Is it right? More understandable. Is it right? It is more people should be in a position to make things very clear. We are giving the information why we are doing this, why the reason. Is that why firms, is that companies prepare financial system? Any idea? Why companies prepare financial systems? Fast. Right or wrong? Tell me, nothing will happen. Allah Kareem. Is it? See, companies prepare financial statements with respect to what? 3 P's. Understand the point. Just now I told you. What is that? You are talking in terms of performance. Is it? You tell me, you don't have idea? Tell me, I am here to help you. Performance, you are talking in terms of position, you are talking in terms of prospects. People will prepare financial statement. Companies will prepare financial statement only for one purpose. Is it right? To make. Is it right? To make economic decisions. Very important chapter. Once the chapter is complete, please revise this with video. See, videos, recordings are done exclusively for you. Okay? You listen to it. Things you don't need further revision as such. Okay? Next, when you do the things, is that to make economic decisions? Is that to buy or sell? Is that to give to customers? They take the decision to buy, to invest or not to invest. Banks will say to give loans or not to give the loans. Is it right? That is the basic concept behind it. Lenders will say to sell or not to sell. Is it right? This is what we are talking in terms of economic decisions at that. That's what we say. We are talking about the 3 P's. Always remember this. Is that? Always remember this. Performance for the income statement. Is that? Performance for the income statement. Position for the statement of financial position, and prospect for the cash flow statement. Fine. Now, what is the fun? When you do the thing, there should be some relevance. Should be relevant means relevant during the period. Is it right? When you are talking about the relevant during the period. This year should be this year. Is that during the year? This last year should be for last year. Is it right? Next, you have to have faithful representation. What you are going? We always say it is true and fair. Is that? We always say it is true and fair. And most importantly, is that you should make. And we are not going to mislead anyone. And once we are doing this, there should be a comparable. Comparable means they will always give it for 2 years. Verifiable. You have to verify with what? You have to verify with the source documents. You are paying 100 riyals. Is it right? You are buying one product and saying that I will pay 100 riyals. You will come out without taking the receipt? No. You want receipt for that. Acknowledgement. Verifiability is there. You are talking in terms of timeliness. Is it right? We are saying that when we are doing the timeliness, we are talking in terms of what? Periodicity. Every accounting financial statements will be for 12 months. Is it right? And most importantly, we are talking in terms of what? Understandability. It should be under what I am presenting, that should be understand to you. What I am giving a financial statements, that financial statements you should understand. Is it right? You should not get confused. Fine. We are giving only the summary of this, but even the summary makes a lot of difference. Is it right? If you take this into consideration, this is nothing but the framework of financial reporting. Is that what are the things you will cover in framework of financial reporting? You are covering the regulatory bodies, IAS, IFRS, all those things. You are talking in terms of the assets, liabilities, equity, expenses, and revenue. Is that you are talking in terms of qualitative characteristics? You are talking in terms of quantitative characteristics. Okay, that's the reason we have to work it out. Are you clear about this?
Yes, sir.
Yes. Okay. Now, what it says, they say that, is it right? Is it? They say that, see the thing. Is it? 1 minute, just I want to make, yeah. Is it? Now, when we say that it's a conceptual framework, is that it says that you are talking about International Accounting Standard Board. But there is one board is there who will set all these standards. Is it right? You have with the 4 different bodies, only 4. Okay? Only 4. We are just covering these things. They will ask you one question of multiple choice for 2 marks. Guaranteed question on this. Guaranteed question. You should know which one is doing what. That's very important. Is that? If you are talking about what is standard setting, what they will do, interpretation committee, what they will do, advisory committee, council, what they will do, and foundation committee, what they will do. One question will be there, minimum 2 marks. Keep it in mind. We'll talk about all these things. Next, when you are talking about the framework consists of 2 things. Is that we are talking about the elements. Again, I will not write the elements. Is it right? You have the assets, you have the liabilities, you have the equity, you have the revenue, you have the expenses. Is it right? These are the elements, definition and recognition. You have the qualitative characteristics. You are talking about what? Timeliness. You are talking about relevance. Is it? Fundamental, there are 2. Is it right? We are only 2. One is relevance, one is faithful representation. Is that? That's our faithful representation. Whereas in enhancing qualities, you are talking about timeliness, all those things. Is that 1, 2, 3, 4 as such. Okay? That is the basic framework we are going to work it out. Fine? These are the 4 things. The first one is foundation. The second one is going to be the interpretation committee. The third one is advisory council. And the last one is standard. Means, see, rules will not come just like that. Is it right? Everyone will have, when we are making the rule, every other person, every other member should agree to that rule. Is it right? That's very important. It's not so easy. Is it? When we say debits and credits, there are the rules. Is it right? You have as per real personal account, as per the real account, as per the nominal account, there are the rules. And you will never, you are not going to come across any change on these rules. Rules makes the difference in passing the papers. Fine? Okay? Now, why there is a need of, now it's almost done, you don't need that much, okay? Why it is needed? You are talking in terms of the framework of accounting. Each country uses reporting standards, is affected by what? The legislature, the country rules and regulations, is it right? You have the national company law, you have the European Union directives, because previously UK is there, is it right? UK is a bunch of countries, is it right? I think 25 is there, is it right? 25, 26 countries are there. You should have one rule for all, like GCC, is it right? If you take GCC, there are some rules are there which are common to all GCC nationals, is it right? There is applicable to all. Means you can, as a GCC national, you can start business in any part of the GCC, is it right? There are some criteria for that. You will have Muscat Security Exchange rules. What we'll say? It is the Muscat Security Exchange. Previously it is stock market, MSM, now it is MSE. Is it right? You have these rules will be there. You have to submit the financial reports practically to the Muscat Security Exchange, because that is the one place where we are going to say that what happens. This is the place where the investors will buy and where the investors will sell the share. Is it where the investors will buy and where we are in this? This is what the general perception or understanding about the. You talk about European Union directives. Is that fine? Is that this is the general perception or understanding about why there is a need for regulatory framework. If you don't have the rules, just imagine everyone will work in their own way as such. Got my point? Now, the most important, what is the principle based? Again, one question, two. That's the reason I told you 4 to 6 marks, not more than that. 4 to 6 marks, section A. You take it, my word, it will be there. Is it right? Principle are based on what? Based on the conceptual framework. Is it right? As per accounting standards board. Now, when we say principle based, is it right? We are talking about the principle based in terms of what? In terms of elements. Is it right? In terms of element. The moment you say elements, assets, liability, equity, revenue and expenses. Okay? The moment I will repeat again and again, you should be in a position to understand. I will not ask you in this class. I will ask you these questions in next any class. Is that you should have based on the conceptual framework. You should have qualitative factors also. Timeliness. Is it right? Time comparability, consistency. Is it right? You should have the concepts also. Is it money measurement concept? That's very simple. You should have business entity concept. Is that the moment you say it is a business entity concept, what will happen? The moment you will start, you will have CR number. Is it right? You will have CR number. Fine. You have to make it as a business entity. It is not your own. It is the other segment as such. Is it right? Likewise, you will have the framework. Is it right? You have the framework with respect to the elements, qualitative characteristics, quantitative characteristics, and with respect to the rules. Again, when you are saying it is a framework, three things are there. You have the national framework, you have the international accounting standards, you have the financial reporting standards. Okay. Now, what is the rule? Accounting standards are created what? As per the conceptual framework. Now, when we say accounting standards, I will write like this. We will do this. ISA 1. What it says? It talks about preparation and presentation. We are talking about IS 2. It talks about what? It talks about inventory. You are talking about IS 16. It talks about what? It talks about property, plant and equipment. Is it? It talks about property, plant and equipment. You are talking about IS 18. Is it right? You are talking about IS 18. It talks about what? It talks about revenue. Likewise, you will have IFRS also. IFRS 3, you are talking in terms of what? Business combinations. Is it right? Likewise, you will have so specific standards for accounting and specific standards for reporting. This is the only thing which we are going to understand at the end of that day. Is it? Now, what is the rule-based framework? Is it right? It rules-based framework says that it is a cookbook approach. Is it right? You are doing yourself. Is it right? You are doing yourself. Rule-based system. Accounting standards are a set of rules which companies must follow. Is it right? Companies must follow. What are the rules the company must follow is you should increase the accuracy of requirements. Is that you should be make it a point that whatever the rules are there, debits and credits is the rule. Done. There's no other option as that. Is it right? You are always make a comparison. Is it always you are making a comparison? No, I told you, not a single year you will get an financial statements for 1 year. It will be for always 2 years. Forever. Minimum 2 years. Is it right? You should have the increased verifiability. Rules are rules. Is it right? Anything. Just now I told you, you are paying 100 riyals. You will say that I don't want bill. You know. You say that the moment they will give you the bill, very simple. You will check whether it is right or wrong. Verifiable. Is it right? That is the thing. Whenever you receive, whenever you pay, there is some vouchers will be there. Source documents. That is the most important thing that matters. Without source document, neither you will receive nor you will pay. Less scope for judgmental manipulation. There will not be any judgments. Is it right? You are talking about the rules. That's all. When you are saying that it is debit, credit is the credit, you do 100 million questions. Debits and credits will never change. Is it right? Debits and credits will never change. You have the rules for 3 accounts. Debit the receiver, credit the giver. Is it right? Debit what comes in, credit what goes out. Is that debit all expenses and losses, credit all incomes and gains. If you follow these 3 rules, 3 accounts rules, accounting is on your fingertips. Tomorrow you will become ACCA inshallah. But without rules, it's very difficult to implement. The first thing and the last thing is we should know the rules as such. Is that? Now, what is the second one? You see, very slowly, what we have done? We are talking about the regulatory framework. We are talking about the rule-based and principle-based. We are talking about what? Harmonization. See that thing. What is the harmonization? Harmonization is nothing but, see, that's what I told you. I told you what? I told you what is the revenue. Is it right? What is the income? Is it right? What is the, what I told you, the first one, another one?
Yes.
Sales. Thank you. Is it? Is it? Sometimes it happens. Is that sales? Now, very simple. Revenue is revenue for trading companies. Is it? You should not have make it a point that there is no. Interest income is interest income for all the banks, insurance companies. Is it right? Insurance company is the fee income. Is it right? For them it is a fee income. For them, is it? Sales will be sales for manufacturing companies. Got my point? Harmonization. Very, very important word in accounting. They will test you one theoretical question for 3 to 4 marks in section C. Got my point? I am telling you this. Section C, harmonization. It says that everyone should be prepared on a consistent basis. Access the international finance is easier. Financial information is more understandable if it is prepared on consistent basis. Consistently, harmonization. Now, I will tell you this. Maybe it is too early. Is it right? We have done in terms of tangible assets. Is it right? We have done in terms of tangible assets. We have if you take property, plant and equipment. Is it right? See, for property, basically what we have done, we have taken land. Land and buildings. Is it right? Land will always appreciate. Buildings will always depreciate. Consistently, that's what it says. Is it right? Now, when you say depreciation, how many methods are there? There are so many methods. Is it right? One of the method is straight line method. One of the method is return down value method. See, this is the problem. This is where people will get confused. Once today what I am doing, I should continue next year also. Is it right? I have the option to change. There is no doubt on that. Is it right? I have the option to change. But I should not change every day. Today I am telling you something. Tomorrow I am telling you something else. You will get confused. Understand what? Today I follow one method. They should be consistent to follow the same method next year. Harmonization. Then only it will be easy to understand. Anyway, every standard will have the methods. You will have lot of methods. Everywhere you will have method. Is it right? Earning per share method is there. Depreciation method is there. Revenue methods are there. Is every other element you will have the method. You should be consistent. If the business operates in several countries, that's what I told you, the preparation of financial statement is easier as we will prepare on what? On the same basis. Now you will have what? You will have lot of time. You will have multinational companies, MNCs. You have multinational companies. Multinational companies, you are preparing it in different countries, but the concept will never change as such. There is a greater efficiency in accounting departments. If you follow the rules, there will be greater efficiency, greater effectiveness, productivity will be there. Is it right? Means everyone follow the same rules. As simple as that. Expenses are expenses. Is that you are talking very simple. I will take an example. Is it right? If you say rent will be expense only. Is it right? Rent will never become an income. Is it right? If there is any case as such, is that what they will do? They will specifically identify. Is that they will specifically identify it is rent received or it is rent paid. Is it right? If it is rent received or it is rent paid. 1 minute. अंसारी भैया आज नहीं चाहिए अंसारी भैया से ठीक है वो नहीं गया मैं किसी रीज़न से थैंक यू सो मच इज इट इंशाल्लाह आई विल लेट यू नो तुम्हारे पैसे देने का आई विल गिव यू नेक्स्ट टाइम ओके थैंक यू फाइन सॉरी या आई एम हियर is that this is what it says is that rent received rent paid is that that's what it says you have to be very clear what you are receiving what sometimes they will not say anything they say only rent means rent paid not rent received unless until they say rent received you have to identify it as a rent received is that consideration consolidation of financial statement see is it what is the consolidation we will cover this is it what will happen you will have a group company is it right you will have a group company in a group company you will have different companies is it right every company will prepare financial statements is it but what we'll do at the end we will prepare one financial statement for all is it right one financial statement for all if you follow the same rules for all definitely in the end there will be not that much difficulty in preparing the consolidated financial statement. Keep it in mind. The moment I will discuss somewhere down the line, I get back to you. Okay. Investors wish to make decisions based on the availability of investment. You want to make. Some people want to invest in foreign countries. Is that they want to invest in countries in UK, in countries in US. Is it right? What will happen? Then they will compare. Yes, which one is better, which is not better. See, that is the human psychology, investor psychology, businessman psychology. That always we make a comparison. Is it right? Investors will do with respect to investment. In that process, what is more needed is harmonization, equality. Is that harmonization is nothing but there should be a equality. There should not be any inconsistency. Is that this word will be used in the examination will be there at least for minimum 3 marks. Is it financial would be consistent between different. What is the another issue advantages of you have the tax liabilities of investors. You can calculate easily tax, is it right? You will not have, is it, you are paying tax in US, you are paying tax in UK, you are making investments, you are doing the business, is it right? HSBC is operating in all the countries in the world, is it right? Then HSBC will follow the same structure. Then it will be easy for them, is it right, to calculate, to report the figures for the performance as such, is it right? That is the reason when you are talking in terms of tax liabilities. Large international accounting firms would benefit. Accounting and auditing is easier. Is it? If it is going to be equally. That is the reason we are talking in terms of financial statements. You take any country financial statements, I am not saying more or less, exactly it will be in the same structure. Exactly this, I am not saying more or less. With 100% accuracy, it will start with sales and it ends with retained earnings. Is that? It starts with sales and it ends with retained earnings. Is that? This is the concept of harmonization. There are some disadvantages also. Is that? Harmonization people will not accept so easily. Is it right? They're difficult to introduce. Apply and maintenance or enforce in different countries. Very difficult. Is that? You are talking about what's happening here. See, very simple. I am telling you. We are talking about Islamic banking. Is it right? Islamic banking also what I am telling you what is there. It is not my view. Okay? What is the Islamic? Every segment there is separate way of putting Islamic. As per Malaysia, rules are different. As per identification. As per Saudi Arabia, rules are different. As per Egypt, their presentation is different. Is it right? That is the reason that if you don't have harmonization, whereas if you take into consideration IAS and IFRS, is it right? IAS and IFRS, we have one other thing. Is that GAAP, General Accepted Accounting Principles. Is that general accepted accounting principles? This will make things easy for us to understand, to prepare, to make presentations, and to make the decisions. Is that? It will. That's why it will enforce. What will happen? The difficulty is people find it difficult to enforce. Is that because you have different political parties? Very simple. Is that different political parties, is there, different economic conditions are there, is it right? Different business factors are there. Is that everyone has to understand the same language. Sometimes it happens, sometimes it will not happen. But more or less, it is international accounting standards and IFRS is acceptable by most of the countries. Is that? Different legal systems are there. Is that? Your laws are different. Is that? Your laws are different. They prevent application of certain accounting practices. Is that? Rules are different. Every country will have different rules. Is it right? Fine. That is one of the limitations. We are disadvantaged. Is it right? Different purposes of financial reporting for between countries. In some countries, the reporting is only to work out only to assess tax liabilities, to collect the tax. Is that? To collect the tax. That's all. If you know what will happen if you are preparing the financial reporting, you will know how much is the profits. Based on the profits, is it right? Based on profits, what you will do? You will calculate tax. Is it right? You calculate. See, it differs from people are not interested. Fine. Don't worry about that. Just you make it understand. Countries may be unwilling to accept another country's standard. See the thing. Very simple. You have ACCA. Is it right? You have. If you take, this is for UK, is it right? And you will have a CPA. This is for US. Very simple, is it right? If you are taking ACCA, it is UK based, is it? If you are taking CPA, it is US based. That's all. They don't want to accept this standard. These people doesn't want to accept those standards. Countries which are affiliated to near to UK, they follow UXCCA rules. people who are near to US, is it right? They will follow CPA rules. As simple as that. Technically, practically, ground situation, the bottom line, both are have the same way. Only little bit difference in terms of preparation and presentation. Otherwise, not the rules are going to have its. If we are talking about the harmonization, costly, it will take some amount to implement it. Is it right? It's very difficult to have the things. Is it? Just remember the concept of harmonization and what are the advantages and what are the disadvantages. Are you clear about this? Yes, good. Okay, now I told you what are they are talking about foundation. Is let's see how the rules are there. What are the national standard setters? How they will set the rules? The first one is the foundation. Is it right? It is a supervisory body of the board. See, just keep it in mind. What you have to keep it in mind is what foundation will do and what interpretation committee will do, what the advisory committee will do, and what the standards boards will do. Is it right? Only you have to remember this. Is it what each one will do? Foundation is responsible for issues and ensuring each is properly funded. Is it right? Each are funded. See, you need money. Is it right? You need money. Every country needs money. All countries are not on the same line. Very simple. Is that some are developed countries, some are developing countries, some are underdeveloped countries. Is that now you want standards, means you have to take the people who are not developed. I will not take names of the countries. Is that's a different case. Okay, fine. Forget about that. Means when you are having the differences, developed countries, developing countries and underdeveloped countries, then you have to take everyone along with you. Understand point? You have to take everyone along with you. You should not leave. See, if you are leaving developing countries, tomorrow you cannot do trade also. Is it right? You cannot do trade with those countries. You cannot say that country is not good. We are not going to have any trade. No, you will do trade with every country in the world if it is beneficial to you. Is that you will do trade? Means you have to take into consideration that every country, every member body. When say every member, every body, every country, is that right? Should be properly funded. What is the objective? The objective is to have to develop a set of standards of high quality, which are not only understandable but most importantly, it should be enforceable. Fine? That's very important. Promoting the use or application of the standards in terms of IS and IFRS. Is it? Bring on the convergence. What does it mean? Any idea? Fast. Convergence means you have the national standards. Is it right? National standards, is it right? I'll put like this. I will write here only. Okay? You have national standards, you have international standards. The difference, the gap, I will not say, the gap should be less. The more understanding. The more understand. The gap should be less. Is that there should not be a gap. Gap will be there, but the gap has to be less. Is that this is what we are talking in terms of the gap. The difference, I can say. Is that the misunderstanding. Okay? The misunderstanding should be less. Is it? There should be a common understanding. I'll put like this. I am very much clear. There should be a common understanding between national rules and international rules. Fine. This we are going to, that is the function of a foundation. What is the function of the foundation? Is they have to develop the global standards of high quality. They have to promote the use of the standards, and there should be a convergence. Means you should bring together two different bodies so that they can work effectively. Is that very, very specific? Is that what is the International Accounting Standard Board? It is responsible for only one thing. Is that it is not difficult. It is only responsible for what? Issuing the standards as such. Means standards are developed by the foundation, and they have responsible for in terms of issuing. So you have to issue the standards as per the requirements. Fine. Now what it says is that what are the IR interpretation committee? Is that what is the interpretation committee? What the interpretations committee will use? See, every standard. See, the moment you have the law, is it right? The moment you have a law, is it right? Some people will say positive, some people will say negative, and this law will be amended. Means I am not saying change, additions or subtractions, amended from time to time. This there will be some additions, is it right? There should be some deletions. Is the issue of, that's the interpretation. When you come up with a rule, people will ask, one country will ask, what is this? It's not workable, it's not feasible. Before you make a law, understand point? Before you make a law, you will have a lot of discussions with the member countries as such. Okay? Then only you should make it a law. Cannot say that I'm making the law and it is applicable only for 10 countries. There should be a diverse interpretation of IFRS have arisen. This must be approved by what? These laws should be approved by International Accounting Standard Board. Is that it? International Accounting Standards Board. It has to be done. One, it is approved by them, then it will work. Okay? Means what the interpretation committee will do? It will issue a guidance matters where there is a divergent difference of opinions, and they will come to a common understanding. Once they come to a common understanding, those rules will be approved by the IASB as such. Advisory, they will give only advice, that's all. Is it right? On the what to do, what not to do, that's all. That simply you can put it like this. Is it right? They will only give the advice with respect to the subject matter as such. Is it right? They say IFRS provides a forum for board to consult a wide range of interested topics. Is that what are the objectives? They will advise the boards on this agenda decisions, and what is the priority, which one should be taken first. Is it right? What is important, what is not important. When COVID came, is it right? When COVID came, definitely these people have become active. Is it? They should have a common understanding how we have to treat that situation in particular. Is it right? Informing the board. Which board it is? International Accounting Standards Board. Is it right? About the organizations and individuals on the council, if there are any major setting projects, standard setting projects. If any rule is coming, if anything, any rule, any standard or financial report, anything is added or anything is deleted. Is it right? You have to get the means setting the rules is not so easy. Giving advice to the board or the trustees as such. These people will give they will work as a advisory council. What the advisory people will do? They will advise the board on the agenda, decisions and priorities. They will advise on the basis of how the standards should be set, how it has to be processed, and they will advise the board with respect to what any other things which are related to financial statements only. Keep it in mind. They will not go beyond this. Is it? They will not go beyond. Now, why we are studying this paper? That's very important. Is that why we are? What is the objective of studying this paper? The first and foremost, to provide information about the entity that is useful to what? Useful to the existence and potential investors, lenders, and creditors in making decisions. In other words, we are making the financial statement for whom? For the stakeholders. These people will take which type of decision? They will take economic decisions. Is that? They will take economic decisions. That's the only purpose why we are preparing, why we are studying this subject as such. Is that the purpose? What it says? Very simple. I am little bit quick here, okay? Little bit because of theory. Is that we have to focus on what? We have to focus on the objective of financial reporting. Financial reporting objective is to prepare the financial decision for whom? For the stakeholders. Is that? For the stakeholders, so that they can be in a position to take the decisions. You have the qualitative characteristics. What are the qualitative characteristics? Timely is there, consistency is there, relevant is there, reliable is there. Is it right? Another, the 7 or 8 are there. Okay, we have to talk about the qualitative characteristics. It means we should not only focus on the amounts, but also you have to focus on the way it is presentable. Is that faithful presentation? Is that? That's very, very important. True and fair. Qualitative means you are not measuring anything in terms of currency as such. The definitions of elements of financial statements, which we are going to do in the next few slides, and the concept capital, and what is a capital and what is a capital maintenance. Capital is nothing but capital expenditure. Is it right? We are talking about what? Capital expenditure. When we say it's a capital expenditure, it should be more than 1 year. There is a rule. If it is more than 1 year, we have to show it where? We have to show a statement of financial position. Whereas you will have something called as revenue expenditure, that is less than 1 year. Then it has to be shown in income statement. Understand this. Getting a point? You understand it is theoretical concept, but you understand this. The problems, the calculations will be very, very easy for you. Okay, the calculations will be very, very easy for you. Is that? That's what we are talking in terms of recognition. Is it right? In the lecture 3, I think so. Is it right? Lecture 3, we are talking about the tangible assets. Is it right? In tangible assets, what we have done? If it is a capital expenditure or it is a revenue expenditure. If it is a capital expenditure for more than 1 year, you have to capitalize it. If it is a revenue expenditure, you have to show it in the income statement as such. Got my point? That is why we have understood about the concepts of capital and capital maintenance. The purpose of the framework is to assist the standards to develop the IF reporting standards. Is that based on consistent? Is that you should not change? Are the prepared to develop accounting policies with no standard applies to a particular transaction or event, or when a standard allows choice of a accounting policy as such? Is that you have to prepare? You have to have a flexibility. Is that you should not say that you have to take this and you have to work out on this only. That is the reason whenever we are talking about the standards are based on what? The standards are based on assumptions, and the standards are based on every element of accounting. I'm saying this, every element of accounting, assets, liabilities, equity, revenue, expenses. Is that everywhere there is an assumption. Everywhere there are some methods are there. Rent, accrual concept, money measurement concept, business entity concept. Is it right? Likewise, these things have the direct implication on preparation of financial statements. Assist all parties to understand and interpret the when we say all parties, it is nothing but we are talking in terms of what? We are talking in terms of stakeholder. The framework is not itself a standard and does not override any specific IFRS standards. Means there is no overlapping, isn't it? There is no, if any rare instances, there may be some conflict. Very rare cases. But even if you do go into that detail, you will not find at this point of time. In order to get we understand this point, we have to have good experience in the financial reporting. See, tomorrow, inshallah, once you are or become an ACCA, you will say, you will not become expert in all. Okay, very simple. I'm telling you this. You will become expert at only in IS 16. You will become expert only in IS 18. You will become expert only in IS 17. As simple as that. One standard, you will make it, you will become expert on that. You know every other standard. I'm not saying that. You know every other standard, you know how to explain how to applicable the standards, but ultimately the specialist will be one specific standard, one or more than one, that's all. Okay. Now, what is the conceptual framework? See the thing. Again, I'm not going to repeat it, okay? You have the qualitative characteristics, isn't it? Qualitative characteristics is what? In terms of how we can make in terms of reliable, relevant, all those things. Is it right? If you take all these things, is it? If you take all these things from this till the end, is it right? We are very much on concept about not in terms of money, but only in terms of qualitative. Is it? It should be relevant. It should be reliable. Is it right? It should evaluate. See the thing. It should evaluate past. It should evaluate present, and it should evaluate the future. When you are talking about the past, we are talking in terms of income statement. When you are talking about the present, we are talking about the statement of financial position. When you are talking about the future, we are talking in terms of what? We are talking in terms of cash flow statements. That is the reason we are talking about 3 P's. We have to have a confirmative value. Confirmative value means you should know, is right? We have to make very clearly. We should put it as, yes, is it a profit or it is a loss? Confirm or correct past evaluations. You should make sure that there's no ambiguity. Is it right? There's no doubt it has to be there. Is it right? You should have a confirm means verifiability. Is it right? You have to make that, you have to match from one to another. Is it right? You are talking about the price. Is it right? Confirmative value. Is it? You are talking about the price. Price is very confirm. Is it right? Cost is very confirm. Very simple. As simple as that. Is it right? You should have faithful presentation. Always you should be true and fair. It should be complete. It should be neutral. Sometimes you will have profits. Sometimes you will have losses. When you have the losses, don't say that we should. If losses are there, fine. You have to reflect it losses. Is that in some cases it happens. You see, changing from profit to losses and losses to profit is very easy. I am telling you very simple way. Is it right? You will have the creative accounting. Is it right? But in any case, extreme of the extreme cases also, a accountant should not mess up with the values just to show the loss into profit or profit into losses. Comparativity is that I told you again, year on year basis. Is it year on? You have verifiability with respect to vouchers. You have timeliness as on the date. Is it? As on date we will mention. Is it right? Timeliness. If you talk about the income statement, what we'll write? We don't write as such. Is that? But the rules say that income statement for the year ending. We say the balance sheet is a statement of financial position as on. Is it? We say these are very, very specific with respect to timeliness, and most importantly, it should be understandable. Is it okay, Rizwan and Shifa?
Yes, it's okay.
Yeah, fine. Little bit theoretical one. I told you in the beginning. Okay, what is the asset? That's what it says. See, asset is nothing but it should generate revenue. People will say asset is nothing but owning. It's not like that. It should generate revenue. Is that economic resource should be there? Is it right? It should give some returns value to you. Is it right? What economic resource is that right? That has a potential to produce economic benefits. Is it? It has to have economic benefits. Is it? What is the asset? What is the asset? You invest now. Is it right? You will get benefit in future. What is the liability? Is the liability is nothing but you will get benefit now, but you will pay in future. Loan is a liability, but you are getting the benefit now, but you will pay in future. Is right? Present obligations of the entity as a result of the past events. Is it right? That's what it says. The present obligations. Past events is last year I have taken a loan, but I have to pay that loan now. Get me point? I have taken a loan last year, but I will pay it now. I will taken the loan last year, but I have to pay in future. Is it right? That is what the liability talks about. Equity is nothing but what people say what you have invested. No, equity is nothing but in simple terms what is the residual interest. Is that what is the what happens? You have the equity. Is it right? When the equity you will have adding or letting. If there is a profits you will add. If it is a loss you will deduct. This is nothing but it is a residual interest. Income is what? It increase in assets or decrease in liabilities. Get your point? What is the income? Income is it increase. What happens? See the things. I will put at it. You will have the sales. Is it right? Sales will increase what? Sales will increase it will leads to increase in profits. Is it right? It leads to increase in profit. When it leads to increase in profits, it leads to increase in equity. Or if there are any losses, is it right? If there are any losses, what will happen? It will have impact on what? It will have impact on equity. Is it right? It will have impact on equity. Equity will decrease. Is that result in increase in equity? Is that result in increase on equity or decrease in equity? Other related things, contribution from holders to the entity equity claims. Is that is the reason. Whatever is left over, it belongs to the equity shareholders. Either you will get more or you will get less. Is it right? That's the basic concept of income. What is the expenses? It decrease in assets. Is that you see very simple. What is the expense? The moment there is an expense, what will happen? The cash will decrease. Is that the moment you are talking about the expense, it will have a direct impact on the cash, decrease in cash. Or if you have expense, is that you are having a credit purchases. Is that what will happen? Immediately your liabilities will increase. First time I can tell you with that much confidence, this is the first time you are listening to this. Is it right? What is people say assets? Everyone say what is asset? Yeah, we own it. See, you own it, but you don't have any, and you are not getting any economic benefits. There is no point of saying it an asset. Is that right? This is the way we are talking in terms of elements of financial statement. The same thing we are doing in all the lectures. Is it right? recognition. Very, very specific. Is it right? An item that meets the definition of an element will be recognized provides it's relevant and it is faithful. Where there is a uncertainty or low probabilities of inflow and outflow. Is it right? Recognition. We are talking in terms of IS 18. Is it right? We are talking about IS 18. When we are saying IS 18, it is in terms of revenue. See, when you are having revenue or sales, is it right? Revenue or sales or income. Now, where will be a credit sales or where will be a cash sales? Understand what? Listen carefully. Now what will happen? Is that when there is a credit sales, it will go to whom? It goes to receivables. When it goes to receivables, from there it goes to cash. There is a uncertainty and low probability. Some people will not pay. Is it right? Then what we do, especially in receivables, especially in debtors, is it right? Especially in debtors or receivables, what you will do, you will say that provision. Is it right? We'll say what? We will say provision for bad and doubtful debts. This is only a estimation, and this comes with where it is prudence concept. Today you are going to say that I have given 1,000 reals as a loan. Is it right? Unless until you will not get 1,000 reals as a loan, you should and you must not show this in your books. Is it right? Realize when we are doing the things, what we will do, we are talking in terms of realizable concept. Once it is realized, then only you have to show. Otherwise, I cannot say that I have you tomorrow I will get 1,000 riyal. From where you get 1,000 riyal, that is very important. Is it right? From where you get 1,000, that is very important as such. Unless until you don't get 1,000 in hand, you should not recognize the amount as such. Is it right? Is it okay about this? What we have done? Very simple. I will go through it. There are various different things we have done. First, we have talk about the basic, what is the need for regulatory requirement, national rules, international rules, and regulators. The second, we are talking about the principle based. Is that as per the IS International Accounting Standards Board, whatever the principles, or we are talking about the rule based. Is it right? Then we are talking about the harmonization. What is the need or advantages of harmonization and disadvantages of harmonization, and what are the different accounting in national standard setting bodies. There is a foundation and there is a accounting standard board, interpretation committee, and advisory council 4. Okay, and what is the objective is to make present the information to the stakeholders, and it is for the economic decisions as such. Is it right? They are talking about the conceptual framework. Then they say what are the qualitative characteristics, and subsequently they are talking about what are the elements. In the last, we are talking about the recognition. Are you clear about this? Yes. Okay. Done. It makes things little bit weird, but it makes some understanding. Is it right? What is these are the basic, this with the multiple MCQs. Just we will work it out and we will close it. Okay. Tomorrow morning we will cover another new one. Okay. Tomorrow morning a new one, and after that on Saturday morning we are going to work it out on the other standards. Is that first we'll complete the standards. Okay. Once we complete the standards, from 9th lecture onwards, we apply those standards all through the lectures. When you see, just let me know when you need class on Sunday. It's up to you. Whether it's a holiday, it is up to you. I will not cancel the class. Okay, please. Fine. So, I will take the class. But you tell if you want to change, you want on the same timing, 6:30, 8:30, fine, no problem. For me, I am ready. But if you want to put it early, you just decide and you let me know. Fine. When we talk about under the current structure of regulatory bodies, is that listed below act as a overall supervisory body. Is that overall supervisory body? Which one is the overall supervisory? Go back. Is that we go back. When you are talking about the overall supervisory body, is it? What advisory body gives only advising? They will not do any supervision. Okay, advisory interpretation company only make the they will any time to time they will add and they will delete. Okay, international standard boards only issue. Is it right? Whereas this is the supervisory body of the board. Which one is there? Foundation. It is the supervisory body of the board as such. Which one is? Foundation. Is it right? If you take the things, is it right? If you take the things, I will write these here again and again. Is it right? Interpretation committee, what they will do? They will add and they will delete. Is it right? International Accounting Board, they will issue. Is it right? Advisory body, they will only advise. Is it right? Foundation is the supervisory body. Fine. Next. What is there? Which of the following listed below are issuing? Is that who will issue this? You know this. Is that who will issue the international standard? The board will issue. Is that the board will issue the standards? Is it right? Now the same thing is that who will going to which of the bodies listed below is responsible for approval of draft? Is it right? The standards board. Is it right? The board will issue only after the approval. Is it right? The board will issue only after the approval of the drafts. Is it right? Interpretation committee only talk about addition and deletions, all those things. Is it right? Which of the following best describe the role of advisory? Is that what they will not prepare this is by whom? To prepare interpretations for IFRS standard. This is IFRC. Is it right? International Financial Reporting Interpretation Committee. Is it right? What is that? What is that? 1 minute. IFRIC. Is it right? Interpretation IFRIC. To provide board with the views of members on setting standards projects. Is it right? Which one is there? Which will set the standard? Which will set the standards projects? Advisory council. Is it right? Which will do? It is a advisory council as such. Is it right? It is who will do? This is advisory council. Is it right? Who will promote? Who will promote which one? Rizwan. Yes. These things, just revise it, okay? I know, but again I will reconfirm it before putting the things. Is it right? Fine. To select the members of the board, it's not the advisor. Is it right? Now, under the conceptual framework, is it right? For financial reporting, which is the threshold quality of useful information? Top. Threshold means what? At the top. Is it right? At the top. What is the conceptual framework? We are talking in terms of relevance. We are talking in terms of what? We are talking in terms of faithful representation. That is what it says. Is it right? When you are talking about the qualitative factors, is it right? We are talking about relevance and faithful representation. Faithful representation is otherwise people will use in some books reliability also. We have to rely. Is it right? We have to rely. Whatever the financial statements are prepared, the stakeholders should rely on this, because the stakeholders, is it right? I will write this. Is that stakeholders? Is it right? The stakeholders should rely. Why? What is the reason? Because they take economic decisions. If you are giving right perspective, they will rely on it. That is the reason we are preparing true and fair. The auditor will overlook it, and subsequently we are going to make sure that how it will work. Is it fine? According to the is it right? According to the conceptual framework, is it right? According to the conceptual framework of financial reporting, which of the following is underlying assumption of set of financial statements? Is it as per the conceptual framework? What are the things we have to work it out? Is it right? We are talking in terms of what? We are talking in terms of a going concern. We are talking in terms of prudence. Is it? We are talking in terms of prudence. And we are talking in terms of what? Accruals. And most importantly, we are talking in terms of what? Comparability. Which one is this? Which one is the answer is what? Tell me. Tell me fast. Whenever we are talking in terms of assumptions of a set, is it? Assumption of the set, what happened? We have to take into a comparison. I told you what happens always, we will not present financial statements as a 1 year information. We always present the financial statements under two different years, so that there will be a comparison will work it out. Link, is it right? Link it to the concepts as such, is it right? Now, what is relevant and what is faithful, is it right? What is relevant and what is, if it is free from bias, is it right? In free from means what? If you are talking in terms of what? In terms of means true and fair, is it right? It talks about what? True and fair. It nothing but we are taking into consideration faithful presentation. Is that we are talking about faithful? Next, we are talking about materiality. Materiality is with respect to amount. Material, is it right? Amount, that's what it says. When we say it's a material, it should be relevant, is it right? What happens? I told you, when you are talking about the relevant, you say that whatever there is a cost, is it right? That will be the price, is it right? Whatever the invoice, is it right? The invoice, there should be a payment. Is it? That's what we are talking in terms of what? Relevant. Conformative value. Is that conformative value means we have to make sure that this value is reflected as per the financial statements as such. Is it right? For the elements of accounting. Is it right? Or the elements. When we say elements, asset will have a conformative value. Most of the time, is it right? When we say conformative value, financial accounting, is it right? Financial accounting is based on what? Financial accounting is based on historical cost. Is it? Financial accounting is based on historical cost. Conform value, we cannot change it, is it right? We cannot change it, the value as such. That is what we say. It has to be relevant. As simple as that. Is it right? It has to be relevant. Next. Complete. When you are talking about the complete, again what you are doing, we are presenting a financial statements as per true and fair. We are giving an assurance, is right? We are giving an assurance to the stakeholders that these financial statements are complete with true and fair. We are giving them a faithful representation. What it says, the board financial framework identifies qualitative characteristics, is that relevance, comparative verifiability, understandability and faithful representation. Is it right? Now, which of the above are not listed enhancing? What are the enhancing qualities? What are the enhancing qualities? Enhancing qualities is what are the enhancing qualities? Enhancing qualities is comparability. Is it right? Comparability. Enhancing qualities verifiability. Is it right? Enhancing qualities is understandability. What they are saying which is not. Is it? Which is not means relevance and, is that relevance and faithful representations. Is that conceptual framework for financial, it defines the elements of financial statement. One of the elements is the financial statements is what? With respect to what? Expenses. What will happen if there are any expenses? In simple words, assets will decrease and liabilities will increase. Is that right? Assets will decrease and liabilities will increase. Is that? The International Accounting Standards Board Conceptual Framework for Reporting sets two fundamental quality characteristics. Or what is that? They are talking about relevance and they are talking about financial representation. Which characteristics would you expect information to possess if you have a faithful representation? Is that faithful representation means what they say it is true and fair. Is that faithful representation means free from errors. Is that faithful representation means it is free from errors. Faithful representation means it should be unbiased. Is it? Faithful representation means it should be unbiased. That's what it says. What is the faithful representation? Sometimes you will have profits, sometimes you will have losses. We should not have any. We should not do any creative accounting. Is it right? That's a simple way of putting the things as such. Fine. And then last one is according to the International Financial Standards for Framework for financial. What is the objective of financial reporting? What these people will do? This will be the IASB. Is right? This will issue the standards. Is it right? Is to provide about the information about how we are going to make sure that what is the International Accounting Standards Board framework? They will issue the standards to the member bodies. Fine? Are you clear about this? Is it? Is a simple way of making a presentation with respect to basic concepts. Is that we have not done anything, but people will say that yes, we will say that it is a theoretical concept, but it's not a theory. We are taking the theory and we are going to apply this theory in our subsequent lectures. Okay, I'm not going to mix up the lectures, is it right? Some lectures are, tomorrow we'll start another one. It is a very small one, and hopefully once we have done, we will revise the MCQs from the beginning as such, inshallah. Okay? Good. Otherwise, I would have started one. Only these two lectures are there. Okay, simple. Only this and the tomorrow lecture is theoretical one. Once we have done this, subsequently then we can go it faster. Hopefully, I will do my best that hopefully tomorrow we will do some thing related to the section A and section B specifically. If you do section B, we are doing not only section A but also section C. That is very important. Section B is calculation. Once we are doing that theoretical concepts, automatically we will work out on the section C also. Now slowly and steadily we are going to move to section C within this week, inshallah. Okay.